Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video we are going to talk about a company that multiple sources and I will show you rated this stock a buy. Dividend growth in the last 5 years of 22% per year. Corporate insiders have been buying these shares the last 3 months, and many analysis rated as 42% upside or even more. So if you like this video, please do me a favor, hit that like button. If you're not yet a subscriber, hopefully by the end of this video you like this kind of content and you will subscribe. It really does mean a lot to me. Also, don't forget to hit that notification bell so you don't miss out on any videos that I put out. As usual, this is not financial advice, this is just me sharing. With all that said, let's take a look at this company. So the company I'm talking about is Blackstone. The ticker symbol is BX. This is an asset management firm specializing in real estate, private equity, hedge fund solutions. So definitely go check it out. Go to their website, look at their business. You can see from here, impact, and then there's a lot of shareholder information in there, as well as press release and all that stuff. So if you're interested in wanting to a little bit more about this company, definitely go check it out. So let's take a look at some of the PowerPoint presentations. So one of the things I wanted to look at is the balance sheet. So you can see at June 30, 2022, Blackstone had $10 billion in total cash, cash equivalents, corporate treasury. So you can see from the rating over here, A+ rating by S&P and Fitch. 4 billion credit revolver with June, and then the 10 billion total cash and corporate treasure. So now let's swing to tip ranks. Based on their analysis rating, they rated a strong buy, 6 buys and 1 hold. Their price target is up to 122 with a 42% upside. At the time of this video is at 85. And then your highest price target is 137. You got your average of 122 and then the low of 101. So you can see here some of the, again, so this is the top analysis, and then you can see some of it. Look at that. You got 21% upside, 40%, 78% upside, 60% upside, 40%, 34, 52, 57. You got a lot of guys that think it's in a really high upside, 61. Now if we look at some of the analysis, you can see smart score of a 9, which is outperformed. Hedge funds have decreased their holdings, so you can see a little bit more negative, decreased their holdings by this amount of shares last quarter. Now if we look at the inside trading, you can see corporate insiders bought shares worth about this much in the last 3 months, and their signal is positive. Now take a look at Simply Safe Dividend. Based on their dividend safety score, they rated as 45, which is borderline safe. Dividend yield is 6%. You got your beta here, which is very high. Now looking down at the key metric, you can see payout ratio is 85. No dividends paid during the recession. The dividend growth pretty high here. The last 10 years 23%, which is very fast. Last 5 years 22%, which is also very fast. And then the full year 80%, which is very fast. The dividend streak only 2 years, and the dividend increases in 3 years. So what are the months you're gonna get paid? You get paid on February, May, August, and November, and your annual payout would be $5.13 per share, which breaks down to about $1.27 or $1.32 or even $1.45, $1.01. Now based on Simply Safe Dividend, they feel like this is undervalued. You can see here the 52-week range, really close to the 52-week low of 81. At the time of this video is 85, and then you got your high of 148. Yeah, and then you can, now let's take a look at Market Beat. Based on their analysis, they rate it as a moderate buy. They have a 45% upside. Short interest and is bearish. The dividend strength is weak, and then you got your inside trading of selling shares. Now let's take a look at Webull. Based on their analysis, they rate it at 16, which is a buy. You got 42% of buy and a strong buy of 18%. Now if you look at the price target, you can see a high of 135, average of 115, and then a low of 101. Switching now to bar chart. Based on their analysis, they rated it as a buy, and then the price target is 150, the high of 153, mean of 124, and the low of 101. And you can see here, currently it's a mixture of 4 holds, 1 moderate sale, and then 3 strong buy. Now if we take a look at Stock Rover, based on their analysis, there was 11 of them. They rated also as a buy, which breaks down to about 6 buy, 6 strong buy, 1 buy, 4 hold, and no sell. Now if we go to industry, the risk and return, you can see S&P 500 5-year return 54%, the industry is 12, and then you can see 225 5-year return, and then the 3-year return is 106. You can see the growth here as well as the profitability, and then you got the dividend here stuff. Now take a look at simply Wall Street based on share price and fair value. You can see 85 is the current one. Fair value would be 49. They feel like this is 73% overvalued. Yeah. If you look at the overview, you can see the positives and the risk. So you can see some of you here, like price to earnings ratio, dividend yield is not covered. So if we go over here, you can see the ownership and the buys. Yeah. So here's the inside trading. So you can see from the last 9 to 12 months, there's a lot of shares sold. Last 6 to 8 months, there's been some shares sold, and mostly it's buy. And then the 3 months, you can see most of them is buying. And then 0 to 3 months, they've been buying. All right. Now looking at Robinhood, you can see at the time of this video, it's down 1%. For the week, it's down 4%. For the month, it's down 16%. 3 months is down 10%. And then for the year, it's down 26%. And then the 5-year is up 155%. Now, if we look over here, some of the analysis, they rated it as a buy, 60%, hold of 33%. And then the moat is now, and then you got your earnings, which is available on October 20. So we'll see how that goes. So my take with this, I think it's a solid stock. I'm personally gonna see if I can start a position in here. My ultimate goal will probably just first start start at 10, and then eventually start from 10 to 20, slowly buying shares here and there, and then eventually getting to maybe 100 shares, and then we'll see how that goes. I'll definitely gonna go and start buying it when I see more of a dip. So I'm looking at if it's gonna go down a little bit more to the low of 181, 82, with the market being the past couple of days being red. I'm gonna try to see if I can get it in a much more cheaper price than what we see right now. So other than that, thank you so much for watching, guys. Hope you liked this video. Please give it a thumbs up. As always, please remember, do your own research, and always stay cool, keep investing, and I'll catch you guys on the next video. Right, take care. Aloha.